If you have a Roth IRA, it might just be sitting and not making any money. A lot of people hear that you can put money in and it'll grow at 10 or 15% per year. But what they don't realize is the amount of growth is totally dependent on how you invest your Roth IRA. You can't just put money in and get a return. So here are 3 ways that you can invest your Roth IRA that's going to help you maximize your long-term financial health. So the first thing that I hear from a lot of people is that the stock market is gambling. And so we want to keep our money safe. And that's really true. Nobody wants to lose money. But safety does come with its drawbacks. So this is things like investing in money markets, investing in CDs. You can also invest in bonds. Those are very conservative. Real estate sometimes can also be a conservative investment. These are all very conservative investments that are going to grow your money a certain amount, and they don't come with a ton of risk. Especially money markets and CDs. Sometimes they even literally come with a guarantee and backing by the FDIC. But in exchange for that lower risk, you're expecting a much lower return from these investments. Overall, I would say you're maybe expecting somewhere in the 3 to 6% return range. And in that case, you're barely beating inflation if you're keeping up with it at all. What this is really good for, on the other hand, is if you're actively pulling money out of your Roth IRA. So if you're retired and you need this for income, you might want to have more of your assets inside of the safety bucket than in the more aggressive buckets. So that's one way to invest your Roth IRA. Another way is to diversify. So like I said, a lot of people think that the stock market is gambling, which can be true, but if you build a diversified portfolio, we have a lot of history that suggests over the long term, you can get a better return than investing in bonds and cash and CDs. This is things like index funds. You can even buy individual stocks as long as you have enough of them. Usually 1 to 200 is the recommended amount to have a well-diversified portfolio. When you buy either of those things, what you're getting is not any one stock or Bitcoin or these crazy risky assets. What you're getting is a portfolio that contains hundreds or even thousands of different stocks that move in different ways so that all you get is the average. The average stock market does really well. We've seen that stocks on average have returned somewhere in the 9 to 11% range historically, especially in the US. We've had that higher level of returns. But this comes with a downside risk. If you invested your money in 2001 when the dot-com bubble was about to crash, you wouldn't actually have any return at all for the next 10 years. It's called the lost decade. But if you had invested your money 10 years ago, you would have gotten well above that 9 to 11% range because the markets have done really well. If you're holding it for the long term, and by that I mean 15, 20, 30, 40 years, then you can rest with a high level of confidence that you're going to have better performance in the stock market than you are in cash and bonds. So that's one way of doing it. And we love this inside of a Roth IRA because you're getting all of this growth tax-free. You might say to yourself, okay, we're getting tax-free growth. Why don't we try and maximize that tax-free growth and speculate? Okay, and this is where we're putting lots of money in 1 to 5 stocks. This is also things like Bitcoin or options trading. Day trading also falls under this. And you can go online and you can find plenty of people who do this, and they don't make 10% per year. They make 100% per year, which is just an insane amount of return to get. But you have to understand that having that insane amount of return comes with an insane level of risk. So much so that you might day trade your whole life and have a negative return over the entire long period. Whereas with a diversified portfolio, I can say with a pretty high level of certainty that you're going to have good returns over long periods of time. So if you look at what the range of outcomes are in here, over the long term, it might be anywhere from negative 100%, which is to say you lose everything, to an almost infinite amount of gain. There are some people that get rich off of this, but I can tell you from experience, there are a lot more people that stay poor because of this. So if you're thinking about speculating, I wouldn't recommend it. You're better off just going with a diversified portfolio. So now you know 3 ways that you can invest your Roth IRA. They're going to help you have your best financial life. If you need someone to help you invest your Roth IRA, give me a call. This is what I do for a living. I'll put my contact information down in the description. And if this information was helpful to you, I'd really appreciate it if you liked and subscribed. And always happy to look at your comments if you have any constructive criticism for me.